Good evening, everyone. We would like to welcome you all to the Q1 FY19 earnings call of Havells India. The management today is represented by Mr. Anil Rai Gupta, Chairman and Managing Director, Mr. Rajesh Kumar Gupta, Director of Finance and Group CFO, Mr. Rajiv Goyal, Executive Director. I would like to hand over the call to Mr. Anil Gupta for his initial remarks, post which will open the floor for Q&A. Over to you, sir.
Hello. Good evening, everyone. Yeah. Hello, can I start?
Yes, sir. Please go ahead, sir.
Okay, good evening, everyone. Thank you very much for joining the call. So, FY 2019 has started on a very encouraging note. There is secular growth across all product verticals in the first quarter. It has been partially supported by lower revenues in a GST-disrupted quarter of the last financial year. Still, the growth is well dispersed and seems sustainable. Switchgear business has also grown after several quarters, led by exports as well as domestic markets. ECD continues to do well, though it was most affected in the last year in the first quarter, and also aided by lighting and cables. Lloyd has completed one full year since its acquisition. We are greatly satisfied with its progress and are positively disposed on its underlying potential in the long run. To summarize, we are quite optimistic on sustaining growth ahead in both revenues and profitability for the rest of the year. We can now proceed to Q&A.
Certainly, sir. Ladies and gentlemen, we'll now begin the question and answer session. Participants using speakerphones are requested to use the handset when asking questions. To enter the question and answer queue, please press star 1 on your phone now. If you'd like to withdraw your question and exit the queue, press star and 1 again. We have a question from Mr. Naveen Trivedi from HDFC Securities. Please go ahead.
Yeah, good evening, everyone, and congratulations to the team for the excellent numbers. Sir, if you can just give us some idea about the breakup of the ECD business in terms of how new products is panning out, and if you can share about how fan market has and your growth in the fan segment.
So generally we don't really give separate numbers, but as you can understand that a large part of this business is fans, and fans has shown a very decent growth in this quarter as well. Not that we've not grown well in the last year. It's just that GST disruption had been the maximum in the consumer durable category in the last year, and hence we can say that this growth is partly aided by low growth in the GST, low growth in last year. But overall, I would say that fans growth has been decent. Our focus on leadership position in the premium fans category has really led to this growth. First quarter, I would say that the market has done decently well, but I think I definitely feel that we have gained market shares both in the premium category as well as in the base category. So, and we continue to do well in the appliances category. We mentioned last year that we have put a lot of corrective steps in the domestic appliances business, and that has now shown decent growth in this. So overall, consumer durables, all product categories, including fans, has shown good growth.
Sir, is it possible to share our market share in the fan segment?
Well, I think overall we are definitely around 15%, but in terms of premium, 17%, and in terms of premium fans, we are definitely above 40% or so.
40%. And is it fair to say that premium contributes around 18-20% for the market?
Around what?
Premium segment contributes 18 to 20% of the total fan market?
Around a quarter of the market.
Okay. Fair point. If I can just ask about one more question on the Lloyd business. Considering the erratic summer, you reported 14% growth during the quarter. So how this thing has panned out well for you, considering the season was expected to be very weak for this season. So if you can just give some highlight on that part.
So I think, first of all, it is a product mix of all the products, air conditioners, LEDs and washing machines. However, as you can understand that it is largely led by air conditioners. There has been a lot of efforts put in the last year on Lloyd. Also on the brand building, the channel expansion, getting into newer channels, alternate channels. So a lot of it is also due to that, and also there are these changes in the energy ratings have also helped pick up the ASPs of the product, as well as, consumer also going towards higher-end products like the inverter-based models. So, in effect, the change in the brand perception, the premiumization of the business is definitely helping. However, I really wouldn't say that, because we still are a small player in this segment, there is a lot of scope to grow. And we definitely should give Lloyd a breathing space for, showing long-term potential. So I think major focus is on putting in investments in Lloyd in the coming years.
Fair point, sir. If you can just share the last thing, your volume growth in RAC and the market growth during the quarter.
That I think we'll have to look at and get back to you on that.
Okay. Thank you so much, sir.
Thank you. Participants are requested to restrict the questions to 2 at a time. Thank you. We have a question from Mr. Nitin Arora from Axis Mutual Fund. Please go ahead, sir.
Hi, sir. Just 2 questions. Not asking you on a year-on-year where you still have a base in your favor and next quarter also a base in your favor. Q3 where you start catching up with 180, 190 crore profit. My first question is related to Lloyd. As you mentioned, you're still a lower or let's say a small player in the market. When we saw Videocon leaving out the space, which used to sell about almost 12 to 14 lakh units, isn't it was a chance for you to go ahead, acquire that market rather than increasing your price higher than Daikin and Voltas and still fighting for now because everyone got and came up, captured those units. So just want your thought on that. And then I'll take up the second question.
So I think there are certain, discrepancies in the facts that you're stating in terms of numbers that the competition is doing as well as, our market shares or our pricing. So I think the best is that maybe we can take it offline and you may want to spend some time on the overall strategy. So there are some discrepancies which I don't think I would want to take time on this call.
Okay, so sorry, it was a JFK data, it was not mine. So they must be having a discrepancy there. My second question is related to your base business sequentially. When we look at quarter on quarter, you still, sort of 3% decline when we look at your barring Lloyd. I just want to understand, especially from the ECD segment and lighting, because you said in Q4 there was some, one-offs in lighting, that the lighting grew very fast. And sequentially, I think it should be normalized, if I'm correct. Correct me if I'm wrong. Which are the categories you're looking in this year, which will, let's say, a 50 crore category or less than a 100 crore category, which can eventually become the 150 or 180 crore category? Just need your thought on that. That's it.
So I didn't get, when you're comparing sequential degrowth over this, because, most of the...
So when we add your lighting, your switchgear, your cable and your ECD, quarter on quarter, segment-wise, it's a 3% decline.
Yeah,
when I add these 4.
There is always a seasonality, and this year, in fact, the decline is lesser than in the past few years.
Absolutely.
So, Q4 is actually the highest sales because of the year closing, and a lot of government projects coming into play at that point of time, and seasonality for some products. So, I think there are various initiatives by the company. There are many new product categories, which are, for example, we have launched personal grooming a year ago. We've launched water purifiers just very recently. Solar is a product category which is new. Rio is a segment which is now established a distribution base all across the country. Now we are pushing more product categories to that and getting into rural and the semi-urban segments. So I think there are huge opportunities for organic growth in every product category. And so I would not say just, in the next few quarters, but generally speaking, there are many opportunities for growth.
Any top two where you're looking at, let's say a water heater or something? My question was pertaining to that. Any top two, three categories?
We are already in the top. Yeah, water heaters, we are already in the top three.
Absolutely. So that was an example. So I'm saying apart from water heater, any particular category where you think you can grow much faster than?
Like domestic pumps, water purifier, solar, air coolers. So there are so many product categories which have a potential to definitely grow at a much faster pace than the overall growth.
Thank you very much. Thank you.
Thank you. We have a question from Mr. Inderjeet Singh from Macquarie. Please go ahead.
Yeah, thanks a lot for the opportunity. My first question is regarding the switchgear growth. Would you want to kind of comment as to what was the driving factor behind that? Is there already signs of real estate starting to already kind of get better for that market?
So I would say the switchgear is a mix of growth factors. I think generally speaking, I would not say that there is a huge revival in the real estate, but stabilization of the distribution segment. The GST was a great move by the government to bring, parity amongst the entire trade network. But it has taken some time for the trade also to get used to the new regime. And I think that has stabilized and that has given, good parameters, good opportunities for growth in the trade segment. I think as a company, we have always maintained that we are extremely strong in the retail segment and which was affected over the last few quarters after GST. So it's coming back is definitely helping us. Lower base of last year has helped us. Exports growth has also helped us. Certain product categories like switchgears and even motors with the change of the energy efficiency ratings and the industrial switchgear doing well. So I think it's a mix of things and combined together. I still would take some more time to say that, the real estate sector is coming back, which is definitely the largest part of our consumer, switchgear. So, we'll be happier that if this kind of growth continues in the few quarters, then we can say that, things are coming back.
Sure. My second question is regarding Lloyd's. So how would you characterize, say, the progress till now? Would you think how far are we from a stage where we can start, say, even normalizing the capital deployed in that, in terms of working capital and those kind of things, and where are we in terms of eventually putting up a plant for the air conditioning business in that? That's it from my side.
First of all, I would say, the journey till now is more than satisfying, absolutely satisfying, more than satisfying, I would say. It had no surprises. Things have even turned out to be better than what we thought. Things are turning out to be better in terms of, speed of implementation of certain initiatives that we are doing. So till now it's been absolutely satisfying. Look, the nature of the business is such where there will continue to be seasonality. As long as, sizable part of the business will be air conditioners, there will be seasonality into this business. And I don't think, we are looking at smoothing of the working capital in that sense. Working capital is very efficiently deployed in this business. When the factory comes up, yes, it can, help in, reducing the inventories to a certain extent. But the seasonality of the business will not change a whole lot.
Thanks a lot.
Thank you, sir. We have a question from Venugopal from Bernstein. Please go ahead.
Hi, thanks a lot for the opportunity. Sir, you mentioned on the Lloyd business the impact of FX, rupee and stuff. So just wanted to understand two things there. Rupee depreciation was so bad in the last 2-3 months, or rather YTD. So is there any residual risk do you see from here in terms of potential future impacts this year, because you would be sort of buying internationally or whatever the exposure you will have. That's one. And the creditor side, because you have fairly long creditor days with some of your Chinese suppliers, as you said, what kind of FX exposures are there which are potentially going to hit you when you actually do the cash settlements? And how does the accounting work? So that's my first question.
So Venu, I think both the questions, though you said is one question, is basically answered that this is the restatement of liabilities at the end of the June quarter. So what you are, so we have already taken the full exposure of all the creditors which remain unpaid as on 30th June. So to that extent, it is still not crystallized. It will get crystallized when its actual payment is due. But as of June 30th, whatever the day of the dollar, we have taken the hit, which is reflected in our financial accounts. So you could argue this could be something which remains for the year, depending on the forex movement.
Okay, got it. So it's already reflecting in your P&L. My second question is lighting business. You mentioned in the commentary that because lighting was a business we were seeing going fairly well, really sharp growth in the last couple of quarters, YOY perspective. Now here, when I look at that sequential decline, and the reason I'm saying sequential decline is because you made a commentary saying that we are actively, sort of not looking at ESL now, we're just sort of trying to move out of that, maybe of pricing pressure or whatever. So, so does that really in any way impact how you look at growth for that segment this year? That is, sort of my one of my questions. Second question, rather.
So two parts to your question again. One is the sequential part and the other is the ESL part. I think we've always maintained, and even in the past, we were asked this question, why we are not very aggressive about ESL. We always maintain that we will be looking at businesses where, we normally don't do a lot of government business. It's only the businesses where, technology is understood and there are not a huge number of players like five kind of operators. And, it becomes more like a commodity. So we have taken businesses in the past which have requirements on these. And that's why, our focus on the ESL business can be choppy. We've always maintained that. And so we have looked at decent margin business in ESL. And so it's not that we want to get away out of ESL. ESL will continue to remain as a great potential business. Again, wherever, technology will be will be asked for rather than commodities, there will participate and will continue to do the business. But we have to look at lighting business as a separate other than ESL. So the lighting business
is there a way to is there a way to quantify the last year's ESL number? Is there a way to quantify last year's ESL number sitting in the lighting business?
So I think whatever is the others category, that is all ESL business. So I think
so you have been merging that with lighting, right?
Yeah, I think we'll get back with that number. Okay. And as far as your second question goes, on the sequential part, normally in professional luminaires, which is one part of the business, which is almost 40-45% of this lighting business, there we see a spike in the fourth quarter. And that's because of government projects coming in during that time, closure of many projects, CapEx projects, government projects. And hence, any shortfall that you see over the fourth quarter and the first quarter can be termed as seasonality. So it really can't be seen as sequentially we have degrown. I think overall lighting continues to be extremely exciting opportunity for growth for us. And also it will be sort of a guiding factor for us for growth in the semi-urban and the rural sector. So there we will take lighting as a distribution in the distribution in these areas, and then followed by other product categories. So I think overall with the LEDification, with the government impetus on LEDs, definitely this will continue to offer great opportunities for growth.
We'll have our next question. Thank you, sir. We have a question from Mr. Balwinder Singh from Canara HSBC Insurance. Please go ahead, sir.
Yeah, hi, sir. Thanks for the opportunity. If you can talk a bit about the margin improvement that we have seen this quarter and also on the raw material outlook.
In any particular category that you are asking?
Yeah, we have seen sharp margin improvement in consumer durables segment and also in one another segment. So if you can talk about both those segments, and also on the raw material side, what outlook you can share?
I think margins over quarter on quarter might not be a right reflection, right comparison, because as I said, consumer durables was impacted the most in the first quarter last year. With the lower volumes, the margins also got affected, and hence, I would say that if you see sequential margins for ECD, we are in the range and, continuously improving. As far as raw material goes, there is a business of cables and wires which get directly impacted, and any increase or decrease in the commodity prices normally gets passed on to the consumer. If there is a time lag, if there's a sharp increase or decrease, then there could be a hit or a gain. Otherwise, generally speaking, it gets passed on. There is an inflationary pressure on the commodities, on the businesses, and hence a lot of focus on, rightly pricing the product in the market, but also a lot of focus on the efficiencies within the factories. So, whatever impact comes, pass on as low as possible to the consumer, but more build margins through our efficiencies in the system. So overall, I think, the fact that we've been able to maintain margins despite an inflationary, push on the commodity prices is also reflecting on the overall efficiencies of the company, and that will continue to maintain that.
Specifically on the cables segment, we have seen margins improve from 13.5% last year to almost 17% this quarter first.
Again, you'll have to see it sequentially. So sequentially, there has been a constant improvement in this segment. So I think overall, let's say between 15, 17, 18%, this should be a general trend in the future as well.
Okay. Thank you, sir. I'm done.
Thank you. We have a question from Mr. Saumil Mehta from BNP Paribas Insurance Fund. Please go ahead, sir.
Yeah, thanks for the opportunity, sir. I just wanted to check on one thing. The warranty provision number for this year has gone up significantly. So which part of that business is it? And, over the medium-term basis, do we see any concerns of this warranty provision numbers rising?
Actually, warranty provision overall is largely because of consolidation of Lloyd. And I think you would notice that last year Lloyd was there only for 1.5 months, not for the full 3 months. So that's why suddenly the number looks much higher compared to the past year. So in a sense, I could say it's not comparable with the past year. But if you look at the overall basis and if you normalize the same, there is no significant change in the warranty provision.
So that number as a percentage of total console sales should not be moving up significantly from current level. Is that a fair assumption?
That's right. Let's say from next quarter, you would not see this anomaly.
Okay. And sorry for the repetition. I just wanted to check, what kind of inventory levels do you have right now? And, with the rising copper prices and some of the commodity prices, do you see working capital as an issue in coming quarters?
There is, again, inventory levels are pretty much, under control. And we don't see that increase in commodity would lead to any increase in the inventories. So this commodity has been oscillating in the past, but I think it has been pretty much within the limits we have set for ourselves.
Thank you.
So over the last...
I'm sorry, I request you to come back in the queue.
Sure.
Thank you. We have a question from Srinidhi Karlekar from HSBC. Please go ahead.
Hi. Thanks for the opportunity and congratulations on great set of results. So just 2 questions from my side. So would it be possible to break the 18% like-for-like growth in cables and wire segment in volume and price? And would it be possible to give some guidance on the volume growth outlook for this part of the business? And the second question is, you just...
In this part
the cables and wires.
Yeah, in cables and wires, 8% growth in volume, and overall 18% growth. But also, there is a reverse base effect in this business segment as compared to other businesses. Because last year, because the implied GST rate was coming down, and hence, there was a offtake of extra stocks by the distributors as against other businesses, which was actually the other way around. So there is a base effect in this business as well, but on the reverse side.
And sir, how do you see, I don't want numbers, but how do you see outlook for this part of the business on volume growth?
I think decent. We are still looking at good potential to grow in the coming quarters.
And the last one, if I may, so you touched upon adverse effects impact for a sequential decline in Lloyd segment margin. Would it be possible to quantify the absolute impact that it hit in this quarter?
But I think there you need to take comparison over the last year similar quarters, wherein there was a seasonal impact. So not much product mix has changed over the last year. So hence a similar pattern would continue to remain in the coming quarters.
Sir, what I was asking is really, maybe I'm not getting what you are trying to say, but I just want, one of the reasons for the sequential decline in Lloyd business was because of FX impact, right? So I just want how many crores of the FX impact did really happen during this quarter?
Actually, that we have already said one of the impact is around 8.5 crore, which is already captured in the financials of Lloyd. Apart from that, you see, it could be another couple of percentage points on the sales for this quarter. But you see, it could happen that in any case, the prices, it could get reflected in the future quarter, so it can get recovered. But yes, you could argue there could be a couple of percentage points on that.
Okay, sir. Thanks, and all the very best, sir.
Thanks, Srinidhi.
Thank you. We have a question from Lakshmi Narasimhan from Tata Capital.
Thank you, sir, for taking my call, and congrats on the numbers. I would just want to know what do you see to be the reason for the fall in revenue YOY in lighting and fixtures, and how do you see the growth going forward, and how do you look to arrest this?
So YOY or sequential year?
YOY.
YOY, we've already mentioned that there is the overall growth of about 25% if we take out the ESL effect, which was shown as others. So ESL, if we take out, last year was a 50 crore business, this year is only a 1 crore business. If we take that effect out, it's almost a 25% growth.
My follow-up question to this is, do you then see your margins also improving in this segment considerably going forward?
Why would it be so?
With ESL...
no, I want to mention that ESL also we don't take commodity orders. There also we take products which are not very low margin and based on higher technology.
Okay, sir. Thank you. That will be it.
Thank you.
Thank you. We have a question from Pulkit Patni from Goldman Sachs. Please go ahead.
So thanks a lot for taking my question. Just, sir, one bookkeeping question on personnel expense. Clearly, there's a pretty significant jump in the quarter from a range of about 165 crore, which we were doing every quarter. We've moved to almost a 200 crore range in this particular quarter. What is the run rate that we should expect from here on, or does this quarter include some one-off in the personnel expenses?
Including Lloyd. Including Lloyd. So last year only 2 months, 1.5 months was for Lloyd. So this time it has been added. And other is the increment. So the increase is not. The increment effect as well as Lloyd, full quarter impact has come in this quarter.
No, sir. So if I just read through the numbers, every quarter it has been in the 160-165 crore range. So is it that this quarter had the increment and then after that it continues this way, or does it fall back to 165?
No, this is right, Pulkit, that this is because of increment normally which gets factored in the first quarter. And so you should assume this number going forward for the year.
Understood. That's very helpful. Thank you.
Thank you. We have a question from Mr. Bhargav from Ambit Capital. Please go ahead.
Yeah, thank you for the opportunity. Sir, is it possible to share the cash conversion cycle of Lloyd as well? Because I think in the presentation only the standalone bit is highlighted, or does it include Lloyd as well?
It includes Lloyd as well. It is combined.
So, sir, I mean, is it fair to say that despite Lloyd being a sizable part of revenue, overall cash conversion cycle is just about 18 days?
Yeah, that's right.
14 days in this particular quarter. So, sir, can we assume this as a trend going forward, meaning that including Lloyd, we can still manage with less than 20 days of cash conversion cycle?
We'll try to live up to your expectations, Bhargav.
Okay. So, secondly, if you can just share in terms of how many exclusive showrooms we'll have for Lloyd now, and secondly, if there's any addition on the MBO side for Lloyd.
For Lloyd?
Yeah.
For Lloyd, it's about 55 right now, and we continuously expanding. And multi-brand outlets are opening by the day. So, multi-brand outlets, regional retailers, as well as modern format. As I've shared in the past, that Lloyd was not present in multi-brand outlets. Large outlets, large format stores as well. So that is continuous expanding. That's the continuous endeavor.
Okay. Okay, sir, I'll get back in the queue. Thank you very much, sir.
Thank you. We have a question from Niket Shah from Motilal Oswal. Please go ahead, sir.
Yeah, thanks for the opportunity. Just wanted to know what's the comparable number for Lloyd in the last year first quarter? Because I think we didn't consolidate completely in the last year first quarter. So what would be a comparable number to that?
So it would be, if you do on a like-to-like basis, it would be 14% YOY growth.
14% YOY growth. And safe to assume bulk of them would have, obviously because AC is a larger category, safe to assume that even AC would have seen a similar growth.
Let's say bulk of it is AC. The heavy lifting is by ACs only.
Heavy lifting is done by AC?
Yeah.
Okay, got the point.
Yeah.
Thank you so much.
Thank you. We have a question from Mr. Vinod Bansal from Franklin Templeton. Please go ahead.
Hi, sir. Thanks for taking my question. Just one thing on the cables business. I believe you discussed this bit in earlier as well. The margins continue to be very strong despite the fact that commodities have gone up in the last couple of months, perhaps more. This business used to be 12-13% margins at the segment level till about FY17, and we saw a benefit in FY18 because of lower commodity. Yet your margins have remained surprisingly strong. Could you share some what's happening in this business? Because I suppose this was the most commoditized of all. And where do you see the margins going ahead in next, say, 1 or 2 years?
No, actually, this business is definitely more commoditized than other commodities. But, however, I would not say that it is a commodity business. It is still a very brand-oriented, distribution-oriented business. But as compared to, let's say, a switchgear or a fan or a lighting, this is there is a lesser value addition as compared to other products. But we sell by brand, so a constant, investment in brand and distribution definitely helps us improve the margins. And hopefully, this is definitely a more, on the raw material side is also this is more of a commoditized product. Hence, margins can vary a little bit, but we'll continue to strive to maintain these kind of margins.
Right. If I may just persist with this, I think last year we mentioned that there was a one-time low-cost inventory benefit that uplifted the margins, and the guidance, I don't know if I remember correctly, but about 15% should be a sustainable number. So are we to say that 17% is more doable now, and the 15 is like a lower number to look at?
No, I think let's look at a range between 15 to 17%. As I said, the raw material side is very commoditized and hence very difficult to predict volatile. It's very difficult to predict the exact margins. Yes, in the second quarter of last year, we did get an uptick because of the lower commodity and the advantage of inventory that we had. But otherwise, generally speaking, 15 to 17% is the kind of margin rate that we should.
Right. Okay. And if you can give us some broad sense without quoting numbers, would this kind of a sort of a higher margin scenario would be there for your peers as well in the industry?
That I'm not sure of. I can't say this one.
Okay. Can you also in the cables business give us a volume breakup between your retail and your institutional or industrial business? You said 8% total volume growth. The breakup of that into the two segments.
Yeah, almost 50-50. Almost 50.
Okay, fine. All right. Thanks a lot. Thank you.
Thank you, Mr. Bansal. We have a question from Mr. Ashish Jain from Morgan Stanley. Please go ahead.
Hi, sir. Good evening. Sir, firstly, can you share the ESL number for 4Q, which is there in lighting? Because last quarter we reported lighting including ESL, I think.
Around 30 crores in quarter 4 of FY18 you are asking?
Yes, sir.
Around 30 crores.
Okay, got it. So secondly, if I look at your commentary on cables and wires, I think if last couple of quarters we have been saying that volumes are flattish and the revenue growth was more driven by price hikes and all, versus this time we're talking of a 8% volume growth. So should we think this is more sustainable and can accelerate further, or there's something else to this?
I think let's see. It's start of the year. Let's see how it develops over the next few quarters.
So the only reason I'm asking because last couple of quarters we have been talking of flattish volume growth, and from that if there's 8 to 10%, would you? Okay, so you would not draw any trend or demand improvement kind of a trajectory from
I think it's too early to say this. As I was saying, earlier that the GST disruption which happened, it took some time for the trade to come back to its normal levels. And though we were expecting within a couple of months it will happen, it took some more time. And I think things are now almost back to normal, so that may be an impact as well.
Okay. Got it, sir. Thank you so much.
Thank you, Mr. Jain. We have a question from Abhineet Anand from SBI Cap Securities. Please go ahead, sir.
Yeah. So first thing is on our capex plan for the REC capacity. Where are we on that, sir, in terms of what is the expectation of FY19 capex?
So we are looking at almost a 300 crore kind of a expansion plan on this, and I think by the fourth quarter of this financial year, we should be up and running.
And what volume or the capacity in terms of REC are we looking at for this 300 crore capex that we are doing?
Initial
in terms of tech pieces.
600,000 pieces.
Okay. And secondly, Havells X of Lloyd for the current year F19, what's the expectation in terms of sales growth for the year, sir?
For the year? Is just
yes,
one quarter gone, so let's wait. We are not guiding any forward. Yeah.
Okay. And lastly, sir, what has been the mix of wires and cable in our the cables and wire business?
I'm sorry, can you repeat the question?
Mix of wires and cables.
50-50. 50-50.
Okay, thanks a lot.
Thank you. We have a question from Keyur Shah from MK Global. Please go ahead.
Yeah, my question has been answered. Thank you.
Thank you. We have a question from Arshit Kapadia from Elara Capital. Please go ahead.
Congratulations for a good set of results, sir. Just a few questions. Can you give out how much is your inverter sales compared to your overall sales in the EC division for Lloyd is at present?
30%. On month basis, it's moving at now up to 30%.
30% of your sales. But this number is much lower than the industry, so can we think that
industry is also maybe 35, 40. So yes, I think it is improving for us also every month. But I think 30 is a good place to be in.
Okay, it's improved from 8% to 30%.
Yeah, in a year's time. Okay, and so you have tied up with Hyundai for industrial switchgear. So when is that going to start? We are seeing to reflect in your switchgear business.
It's already started, so we are already supplying some switchgear to Hyundai. And on the other side, on the other industrial products also, by end of the year, we should be having the products also for that.
So how much of the export revenue, you said one of the reasons why switchgear was higher was because of the export. So how much of the export content can you just let us know, sir?
I think the exact numbers we would not like to share.
Okay. No problem, sir. Thank you, sir.
Thank you. We have a question from Aditya Bhartiya from Investec. Please go ahead.
Hi, good evening, sir. So my question is on Lloyd business. This year we had unfavorable weather. Despite that, you have delivered around 14% like-for-like revenue growth. So is it that we have gained market share in this business? And a related question is that despite revenues in Q1 being higher than what we had recorded in Q4, margins are somewhat lower. So is there any seasonality in margins involved?
No, I think as far as margins are concerned, as Rajiv has already explained, there were unfavorable foreign exchange movements which have impacted the margins. So otherwise, things have been quite stable from a pricing and cost point of view. As far as I think overall markets, yes, region to region it has varied. So some of the regions like northern region had intermittent rains and hence the growth was lower. I think it's we need to look at more competition numbers as well as more market data to actually see how much market share has been gained or lost. But I think it's not a very prudent way to look at just a quarter. I think over a period of 1 year we need to look at these kind of market share figures.
Okay. And on margins, sir, even if we exclude the forex cost impact of 8.5 crores, we still had around 9.4% margin in Lloyd business this quarter, which is lower than what we had recorded in fourth quarter, which was extremely impressive at over 12%. So that's why I was asking that.
So I think, okay, so we are not talking about 8.5 crore. We are saying that, you see, what has happened, as the forex cost keeps going up since, you see, April, it gets captured in your new pricing for the model, for the products you are having. So it gets repriced, which means that price increases for the same value. Now you are incurring the higher cost. So this is that forex which is embedded into that, which was not the impact in the first Q4. That's what we are saying, not 8.5.
Ad investment
also. Yeah, and even if you see the ad, you see we have invested significantly higher in Q1 than Q4. So please do not go by one. You are looking at EBITDA number, which is a summation of lot many variables than just the price. Price actually has not changed. Price maybe slightly improved only, but there are headwinds in terms of the forex cost capturing as well as you see the much higher ad spend, which is 7% in Q1.
Understood, sir. Understood. And coming to the switchgear segment, just wanted to understand, have we started seeing contribution happening from our B2B foray? Both, I mean, in switchgears as well as if you can comment anything on other segments as well on the B2B initiatives.
I think there are two aspects to B2B. One is the building projects and the other is the enterprise business, which is more focused. So it's not just switchgear which gets into these project categories. It's a lot of other product categories like lighting and cables, and we've definitely gained a lot by bringing all these products into these enterprise business kind of a solution, and where we are targeting now newer customers like Reliance and Hyundai and Tata Projects, and so there is a lot of focus on enterprise business. I think overall it gets captured in the all product categories. It's not just switchgear. So we are definitely seeing traction from there. But as we see more investments coming in both in capex as well as in real estate, this thing will definitely improve in the coming years.
Understood, sir. That's helpful. Thanks.
Thank you. We have a question from Mr. Pranav Tendulkar from Rare Enterprises. Please go ahead.
Thanks a lot for the opportunity. I have three questions. One is, can you highlight the demand drivers in cable and wires business? Second is, what is the outstanding inventory, raw material inventory in cables and wires business? And third is, can we take now the capital employed in the Lloyd's business as a normalized one? adjusted obviously for seasonality. So these are the three questions. And if you can explain me how are fixed asset investments in the Lloyd's business you are looking into that. So is it an ROC incremental decision, or is there a IRR that you are looking on that, or how? What is the logic behind that fixed asset investments in the Lloyd's business? Thanks a lot.
So on your first question, into demand drivers, so you see, as you said, we have 50-50 cables and wires, and we also explained that around out of this 18%, 7-8% is 9% is the volume growth. So on the cable side, it is largely led by infra. So we see a lot of investment happening both by the government and also by the private sector as well. So that is the growth on the cable side. Wire, I think it's been naturally, as you said, this is a branded product for us, more distribution oriented. So this is the general growth we see in the market after the GST disruption, and the fact that the rate has also come down from 28 to 18. As far as the outstanding inventories, the inventories are normalized. There is no significant inventory on cables and wires. It is, yes, there will be volatility in commodity. Like last year Q2, we had certain upside on that. There might be some downside, but it is not something significant. I think these are fairly well, as I explained earlier, within the tolerance limits we have set up for ourselves. On the capital employed, yes, I think it's a normalized capital employed in Lloyd. It is as per what is for the Havells as well. So we follow the same prudential norms for Lloyd in capital employed, adjusted for seasonality, which you already mentioned in your question as well. And finally, on fixed asset, I think it's not the ROC. I think it's more strategic. You see, you can't be a long-term sustainable player just by outsourcing from others, whether domestically or globally. So I think that is the first thing which comes to our mind. You might be aware in Havells, 93% of what we sell, we manufacture ourselves. Industry may be less than 50%, but that's not a guiding factor. And our ROC continues to be superior in the top quartile in the industry. So ROC will follow. That's not the first thing. Yes, I think this is something which will get delivered. But the first thing is how we strategically position ourselves into the industry and the consumer mind.
We have a question from Mr. Niket Shah from Motilal Oswal. Please go ahead.
Yeah, thanks for the follow-up. I just want to know how much is the spread between our fixed-speed AC versus inverter AC?
So 30% is now inverter.
No, I mean the spread between a pricing of a fixed-speed AC of a similar tonnage versus an inverter AC.
I think that pricing and all we don't like to discuss, and normally it will be, I don't know. Yeah, so I think if you want, we can take it offline, but normally we don't want to discuss this on the public call.
Sure. And just want to know how much would be inputs now as a percentage of our, our raw material cost on a consolidated company-wide basis?
Imports or inputs?
Imports.
Offline check. Yeah, we'll have to check that because Lloyd coming into place, so it's become a sizable part now. So we'll have to check that number.
Okay, perfect. Thank you. I'll take it offline. Thanks.
Thank you. We have a question from Ashish Shah from Goldman Sachs. Please go ahead.
Hello. Yeah, just one small thing. On the AC business, sir, as I understand, the primary sales would be around 14%, considering most of the Lloyd contribution would come from AC. But if you can help us understand if the secondary sales are also in the same range, or have we seen any variation over there?
I don't think there will be much of a variation in the secondary sales because there's not any pressure on the trade to stock the product. So the more and more over the last 9 months or so, I think the pressure has eased over the trade.
Okay. Thank you.
Thank you. We have a question from Achal Lohade from JM Financials. Please go ahead.
Yeah, thank you for the opportunity. Just wanted to check on the Lloyd's part. As you said earlier, it was more exclusive stores, and now we are also penetrating into multi-brand stores. would you be able to give a quantification? Would that be a bigger driver for the growth in the current quarter on a YY basis?
No. So I would not say that, exclusive stores was a bigger push. The exclusive stores were small, multi-brand outlets was also small. I think Lloyd's was more distribution oriented, but now we are expanding the channel into other alternate forms as well. So which are these large multi-brand outlets, regional retailers, as well as modern format retailers. And also...
How much would that be contribute in first quarter, sir? I'm just trying to understand the mix. And is that...
No, I think, Achal, the mix has not changed significantly for Q1. So you could safely take this is on a comparable like-to-like basis growth. The new channels have not contributed significantly in Q1 growth.
Okay, got it. And
thank you. Mr. Lode?
I have second question actually. Can I go ahead?
I request you to come back in the queue, please.
Okay.
Thank you. We have a question from Mr. Abhishek Roy from Stewart and McCurtish. Please go ahead.
Hello.
Yeah.
Yeah. Thank you, sir, and congratulations on good set of numbers. Sir, most of my questions are answered, and just I want to know that, sir, how many AC sales were done in Q1?
Quantities we don't provide. I think we already shared the financial numbers with you.
Okay. And sir, do you think that this cable and business wire segment is sustainable going forward? That type of margin?
We've already mentioned there is a range that we are looking at, and we'll continue to strive to maintain the margins, but we are looking at the range.
Okay, sir. Okay. Thank you, sir.
Thank you. I now hand over the call to Mr. Charanjit Singh. Please go ahead, sir.
Hello. Yeah. Hello.
Yes, sir. Please go ahead.
Yeah. We would like to thank everyone on the call, and thanks for the management for taking the time out and giving us the opportunity to host the call. So, if you would have any closing comments.
No, thank you very much, and thank you everybody for joining the call late in the evening.